exactly is an appraisal gap, and how can I compete with buyers that are paying all cash? I'm Jillian with the Jump Living Group and Jump Real Estate in the foothills of Denver, Colorado. In today's competitive market, buyers are needing to find creative ways to compete with multiple offers on almost all homes. A lot of these times, buyers are competing with people paying all cash. At the end of the day, money is money. So why would a seller care if the money is coming from the buyer or if they're getting their money from the bank? The reason is that because all cash buyers have fewer contingencies. They don't have to deal with appraisal contingencies or loan contingencies. There are some pretty cool programs out there that help you act as an all cash buyer. I would love to share those with you as well. Shoot me a message if you're interested in hearing more about those. But what I want to talk about today is another way to compete, and that is by reducing the number of contingencies you have and offering a larger than needed appraisal gap. With home prices increasing as rapidly as they are, some appraisals have been coming in low. Now, if you're an all cash buyer and you are asking for an appraisal, it makes sense that a seller would be nervous to go with a financed offer that has an appraisal contingency. After all, the median home price in Denver went up 15% in the last month alone. It's going to be hard for appraisals to keep up with prices that are increasing as rapidly as they have been. One way to alleviate a seller's concern is by offering appraisal gap coverage. An appraisal gap is you committing to pay a certain amount higher than the appraisal comes in, and you're going to have to do this with your own cash. Let's look at an example. Let's say the house you're buying is $500,000, so the purchase price is $500,000, and you're planning on putting down 20%. So you're planning on putting down $100,000, and you have $110,000 saved up. So you're able to offer the seller $10,000 worth of appraisal gap coverage, saying that you'll put in $10,000 more of your own money if the house doesn't appraise. If the agent and seller are thinking the house is going to appraise at $450,000, they're still going to be nervous about this, because if you only have $10,000 more than the appraised value, that's going to put you at $460,000. So one quick way to increase the appraisal gap coverage is to reduce your down payment. So obviously talk to your lender and make sure you can qualify for this. But let's say you decided to put down 10% instead of 20%. Now you're going to have $60,000 worth of appraisal gap coverage because you're only going to put down $50,000. You need to discuss this with your lender because you may end up paying private mortgage insurance for a few months, and your monthly payments will be higher. So you've got to make sure you can qualify for this loan. This could help you get the property under contract, and if it appraises for a higher value, you may end up being able to put down the entire 20% that you were hoping to do and get rid of that mortgage insurance. If not, with prices rising like they are, you probably won't have to keep the mortgage insurance for long. There are some other creative options I've been working on over the weekend, and I would love to talk over strategies on how to make you a stronger buyer in this market. During this crazy seller's market, it's important to keep things positive, and creativity is also important. Please reach out to discuss your specific situation.